A very good morning, everyone. My name is KHUSHI. I am from Pune Institute of Business Management, and I will explain about the recent trends in microfinance. So this PPT shows the how the microfinance work. Basically, a microfinance is a banking sector where the poor people gets the loan. In a bank sector, the poor people don't get the loan because of the lower income level and the lower credit score. The vegetable owners and the fishermen don't get the loan approvals from the bank, and they don't start a new business because of the money confirmations. That's why the microfinance come into the existence. The microfinance sector has a underground and the fundamental transformations. It's evolving from the simple credit only investments into a sophisticated regular financial ecosystem. This microfinance help to the poor peoples to get the loan and start a new business. It want to be a become a ownership from the own business. That's why the microfinance are existent into the picture. The next slide will be the from the microcredit to comprehensive financial services. What is it means? So this is explain about the how the traditional model and the how the modern shift from the microfinance are there. So in the traditional model, the microfinance institutes initially focused on the collateral free group lending. Those people who have a approval for the loan, they don't get the collateral from the peoples, and the targeting the low income entrepreneur with the small loans to start the business. In the traditional model, the people get the loan from the microfinance and start the own business. In banking, the poor people don't get the business loan because of the lower income. The vegetable owners and the fishermen have a no that much of the income. That's why they don't want to open the loan approval from the banking sector. That's why the microfinance help the poor people to get the loan and start a new business and start the future with the very comfortable way. The modern shift in the today's microfinance offer the diversified portfolio, including the saving account, microinsurance, pension funds, and the retirement services from the products. So in a traditional model, only loan approval are there, but in the modern shift, the people get the saving account, microinsurance, pension schemes for the future. If the people started with the saving account and started the scheme in the insurance, they get the money from their future. So them future will be secure. The next is to a comprehensive approach addressed by the broader financial needs, income level, and the long-term securities, and reduce the burden from the company. So this will help the poor people to get the loan. The next is a digital transformation in actions. There are the three digital transformation. First is a mobile first lending, second is a eKYC compliance, and the third is a operational efficiency. So in the first lending, the loan distribution and the loan disbursement. If the people have a low income and the low credit score, the loan disbursement happens. The bank will be close their documentation and the loan disbursement. Repayment through a mobile platforms, like in nowadays the digital where is everywhere. So the people don't get to go to the bank sector, go to the documentation and clear all this process via physical way. But in nowadays the mobile system and the digital system comes into the existence, and the people complete their process with the mobile apps and the digital way. So it reduce the costs, is reduce the it reduce the cost. Second is reduce the traveling, and the time saving is the most important thing. The next is to a instant transaction via the unified payment and the biometric system. In traditional way, the people go to the bank and check the documentation, include the KYCs. But in nowadays, the biometric system are there. People have to only with the fingerprint, they complete their all the documentation process with the some like minimal seconds. The next is to is eKYC compliance. The eKYC compliance means to know your customer. The company will be know your customer very digitally way. The biometric verification and the onboarding wish list will go for the mobile way and the digital way. That's why the people save their time, cost, and the whole process will be very easy and simple way. So the poor people and the rural area, village area people also get into the banking and the microfinance. The next is to operation efficiency. The automated workflows, digital record keeping, and the remote monitoring significantly reduce the transparency cost and they improve the service delivery process. The next part is to a regulatory framework. It is the most important part because of the transparent pricing. Transparency is the most important. Mandatory disclosure interest rate. The people know about the interest rate, processing fees, and the total cost. Because of the frauds and the scams are going on in the economy. That's why the people and the customer know about the interest rate, what is the interest rate, how is and the how much of the interest rate they paid, processing fees, and the total cost of the credit products. So loan size gaps, regulatory limits, individual loan amount prevent the over dependence and the encourage the proper prioritize the lending based on the income assessment. Fair recovery practice and the systematic oversight. What is the systematic oversight? Basically is the central bank supervision focusing to preventing the over independence and the maintaining and the sustainability for the microfinance ecosystem. This is the regulatory tightness to reflect the policies and the repeat the expansions towards the responsibility and the sustainability growth from the microfinance, and it is the root from the social performance. The next is to a evolution in the lending approach. The main process is to a traditional way and the modern way how to handling and the lending with this microfinance activity. In a traditional group, the people have to joint liabilities model, social collateral, weekly group meetings, and the peer monitoring. This is very hectic for the traditional group lending, but in the modern way, the individual liabilities, credit scoring system, flexible repayment, and the business expansion is the focus. The hybrid model are also introduced into combining group to discipline with the individual loan flexibilities, particularly for the urban micro areas and the entrepreneurship and the establish a repayment capacity. The next is to a digital exclusions, the dark side. What is the challenges faced by these recent microfinance trends? First is the access barrier. Sometimes the rural area people don't know about the smartphones. They have a no idea about the financial literacy. They don't about know about the smartphones. They uses the keypad phones. That's why the smartphones ownership is not there. Second is to unreliable of the internet connections. Very low internet connections are there in the rural areas. No 5G, no 4G network are there in the rural areas. That's why they are not using the digital money and the digital way to the payment system. This is the main and the most important challenging that I can say that. The next is to a digital literacy gap. Limited education in the rural area because of the people are don't want to learn and don't go for the education and the unfamiliarity with the technology. This is the most disadvantage for the borrowers to adopting the digital platform. If the people are not educated and they adopting the digital platform, they go for the frauds and the scams. There's the roots for the scams and frauds. The people want to create a fraud and scams. They know their people and they want to go for this rural area of the people and scratch the money. The next is to a agent vulnerability. The dependence on the intermediary digital agent may expose the borrowers for the misinformation, fraud, and the explanatory that we talk about it and without the face-to-face oversights. The next is to a commercialization risk, mission drift. What is means? It means to entry private equity and the commercial investors has fundamentally attract to a microfinance landscape. The warning signs was the margin and the social impact, highest interest rate, targeting relatively reduce the outreach to high risk rural borrowers. The next point is to over dependence and the data security risk. It is the most crucial risk I want to say because of the easy multiple loans. In so many banks they are giving the loans to a easy way, low interest rate, and people want the loan and they purchase this loan. The next is a no credit assessments. The banks are not check the credit history, credit score and the CIBIL score. That's why the people have to know get the EMI and bank existing into the fraud. The next is to a repayment stress. If the people don't pay the EMI, the bank will be in a stress. So checking the history and the CIBIL score, it is a very most important thing in the banking. Then next is to multiple lenders. Our next topic is to climate and the urban vulnerability. The rural climate risk. The rural climate risk means the nature disaster like a flood, cyclones, dirty affect to agriculture income and the rural regions, disputing the repayment capacity and the threatening the portfolio stability. And next is to the urban employment risk. The migrant workers, informal sectors are using the employment instability. Like the seasonal income are there. The people are using the seasonal income. They want to business in a seasonal income because of the fluctuations, limited social protection and the economical shocks. The solution is that the climate financial product and the flexible repayment terms are aligned with the seasonal income partners. Thank you so much.